Thank you, everyone, for joining us this afternoon. We're going to have a panel discussion today looking at climate investing in 2024 and beyond. Again, thank you for everybody attending and for our panel today. We're going to be discussing a few topics covering ESG and investing and a few other things. And I do want to leave some time for questions and answers. We have a great panel and knowledge base up here, so we'd love to get some engagement from everybody as well towards the end. I'm going to let you guys introduce yourself. We'll start out with you, Dan, and we can walk through a little background and so people know who we're talking to.
Good afternoon. I'm Dan Labovitz, CEO and co-founder of Green Impact Exchange, which is a startup stock exchange for companies looking to dually list for showing investors their commitment to green and green transition.
I'm Bernard Tan. I'm the CEO and co-founder of Royalties. We are a royalty-based financing company. We also trade on the TSX Venture and also the OTCQX. So we're both investor and also investee.
Good afternoon, everybody. My name is Joseph Lucosky, and I'm the managing partner of Lucosky Brookman. We are a corporate law firm here in the New York, New Jersey area, focused in the capital markets and hyper-focused in the micro-cap area, financings and mergers and acquisitions. We have 45 attorneys, and like I said, this is our space and our community and our ecosystem.
I'm Shawn Severson, co-founder and president of Water Tower Research and head of sustainable investing. So I'm going to go ahead and jump into some questions, guys, so we can get started. First one is a very broad question, so I know we can take it in a lot of directions, but wanted to get an overview of the current investment environment as you see it in sustainability and climate tech, because I think it offers some unique aspects. It's been a tough road over this year for a lot of clean tech companies, ups and downs, 2021, 2022, all over the place. But it's created a unique opportunity for investors, given where we are today, and wanted to talk to each of you about what you think some of the big themes are.
Okay, well, so I'm sitting next to you. I'll start.
Yeah.
I think that there's a shift going on. If you compare to Internet 1.0 and Internet 2.0, what I think you're seeing Green 1.0 shifting into Green 2.0. That there was a lot of enthusiasm, a lot of great ideas, a lot of people were throwing money at it. There was trillions and trillions of dollars being invested in the green space, and I think that there's been some pullback and reassessment as to whether or not each of those investments was viable and the best way to go. And what you're seeing now is the companies that had the solid ideas and the solid backing are thriving, and the ones that were tenuous are not. And you're going to start to see, my prediction is you're going to start to see an upswing.
Yeah, it is, as you say, Shawn, quite an interesting market. I started my career at the height of the dot-com crash. But so it was a very tough environment at that time as well. But some great companies emerged out of the crash. Big those names, came out of it, and really one of the things in this sector in the sustainability side is that long macro trend. That eventually, this won't be the last boom, it won't be the last sort of bust, but over the long term, that's really where I think, from a sector standpoint, is really leaning towards. Now, it doesn't feel good for companies such as ours or issuers, sort of in the downstage, but really, that's really when that old cliche, it's steel's made when fire's the hottest. So I think a lot of companies are going to come out of this stronger, but long-term outlook is definitely very bright.
Yeah, I agree, both of you. But then one thing that you said that resonates with me is the 1.0 to 2.0 analogy. For us on the legal end, it's a little bit different. So we're not so much in the day-to-day of making investment decisions, but we're around investors and investment bankers and those who make those decisions, and really hear a lot about what concerns them in this area and other areas. One thing that came to mind when you were talking about this sort of full circle dynamic in this space is in 2018, we took a company from the OTC to NASDAQ called Blink Charging. Some of you may know that company, may know that deal. That deal raised a lot of money. When we did the NASDAQ deal, I think it was $54 million with all of the warrant coverage, which came out really, really well. It really did nothing for a year or two, or at least as far as the trading fundamentals went, and investors were, lukewarm on it. All of a sudden, President Biden got elected in 2020, and the thing shot up. All the money that was coming into the market and the new initiatives and the new administration. And then recently, it's come full circle. It's come back down, both in trading and interest and dollars from investors. But it goes to your point that it's a full circle process, and better investments, better companies are going to come out of this. But that's a hard example that we see where we've lived that cycle of getting there, boom, to quasi bust, and now getting back on the track, an upward trajectory, and hopefully into 2024.
Because it's become a targeted area where if you're just in the space, it was a rising tide, right, for quite some time, and we see that every day with investors really trying to sort through real business models, looking at fundamentals, like you said, Bernard. Good companies that are able to shine now are really coming out. It's not just enough to call yourself a clean tech company or a climate company. You really have to have business model and something that works. And it's also interesting too overall because we're hitting some of those commercialization targets that a lot of people set out a couple years ago too, right? If you look back and you took EV companies and you added up all their market share, there'd have to be a 300% market share because they're all going to dominate the space. And so now it's created some interesting some pullbacks, and some probably should have come back in, which they have, and others are now ready. It's been a reset, I think, and creates an interesting opportunity for investors.
I mean, if you look at trends are very helpful because Bernard was talking about the dot-com bust. If you looked at what was your web strategy, that was the question in the late 90s.
Eyeballs.
What was your social strategy? That was 2010. What's your and Carly, what's your AI strategy? Right, like everybody's got AI. Well, green was in that line, and what was your green strategy? And now each of those industries, the web grew up to be, Amazon and Google and all the FANG stocks, and social grew up, and green will grow up. It's growing up. It's going to take time.
I think also just on the regulatory side, just to bring it back for 1 second, as a lawyer, we think about ways to, help companies effectively disclose what they need to disclose, be transparent to investors, don't over disclose, don't create work when there doesn't need to be any, but to be transparent. And one of the things that I was thinking about even this morning was I read an article that came out about this concept of AI washing, and you mentioned AI in companies' disclosures and overhyping the AI. Well, this is what the this industry went through years ago, and I think it's sort of settled down where people have become more realistic. Years ago, whatever time period that was, everybody just would mention the word green to try to get some attention. And the markets got more mature, and now they see through that, and they want to see really what's behind that sort of green phrase or green disclosure, and really looking to see what's there. So it's going through right now with the AI side, but it reminds me of what happened years ago in the green space.
This too shall pass.
Well, going back to the green space, and let's break out ESG specifically, because you had a lot of different terminology that people would use. Is it, you're really an ESG company? Do you qualify as ESG, or you just you have great tailwinds that are related to clean tech? So I think let's talk a little bit about what ESG means today, and particularly for for small cap companies. And again, I don't know if you want to, you're more of the regulatory. Well, actually, I think from your perspective and being able to pre-qualify, maybe talk a little bit about what the exchange, your goal would be, and how that fits in.
So I'm on the record as ESG is a terrible acronym because it tries to boil the ocean, and it just invites people who want to pick a fight with you to find something that they don't like, and they can use that to beat you over the head with.
Right.
So start with the disaggregation, I think is key. But and the second thing I will say, which is one of my bold prediction, is that sustainability is becoming the new ESG. People are cramming everything they used to talk about with ESG. Well, you can't say ESG anymore, so now I'm going to talk about how I'm a sustainable company. I have a sustainable DEI strategy. I have a sustainable energy strategy. And I have a sustainable governance strategy. At a certain point, the word sustainable stops meaning anything, and it becomes exactly what ESG was. So start with that. But in terms of what does it try to do? It tries to identify things that are different from the ordinary way of doing business. I'm going to focus my my activities in an area that is sensitive to the impact I'm going to have on the environment, and make sure that I'm resilient to the impact the environment is going to have on me. I'm going to focus my business in an area where I'm sensitive to the impact I'm having on my stakeholders on the social side, and also that I'm resilient from avoiding the kinds of mistakes that, like, the University of Pennsylvania and Harvard are going through today, literally, with whether or not their leadership is quote unquote sensitive enough. And the same thing with governance. I'm going to show that I'm treating my workers fairly, that I'm pay equity, all of these things. It's a lens for focusing otherwise non-financial activities into things that investors can look at and discreetly understand. Is that the most efficacious way to communicate with investors? I'm not sure, because again, you're trying to boil the ocean, but I think it is useful to say it's not all about that bottom line number. That bottom line number is composed of a bunch of things. And you need to think about what are the risks and threats to that bottom line number that come from environment and social and governance.
Now, just to add to that, I agree. But where we sit in this sort of micro and small cap land, there's less discussion of all of that, because the companies are smaller. We see it in the bigger deals when there's bigger institutions and asset managers, sometimes on the private side. But in the true, micro cap land, we see less of that forward thinking and preparation for what's coming down the pike. It's interesting. I woke up this morning. The first thing I saw in my news feed was that the SEC announced that they're finally going to take a vote on some of these proposals in April 2024, which has kind of been hung out there and not sure what was going to happen. So, and not only that, obviously this is, as Dan said, a lot of interest and activity, over 15,000 comments on these proposals, which is an extraordinary number of comments, and some in favor, some against. But finally in April, there's going to apparently be some more clarity on what is expected for companies to move forward with their plan to disclose and communicate.
For us, it's actually a tool. I know from a lot of companies, they use it more as a marketing. But for us, it's one of the tools that we use for screening our investments. And generally, the E can sometimes be quite obvious because of some of the things we focus on, but sometimes not so much. So I can definitely understand sometimes the accusations of greenwashing. And I work with personally use a large bank on my personal side, and when they try to sell me green products, typically it's not very green, right, other than the marketing material, perhaps.
Recycled paper.
Yeah. Or they send it electronically.
Of course.
But one of the things that we use it on, sort of us corporately, is really using it as a screen to make investment decisions. And I would say generally the biggest risk in ESG is not the E or the S, it's the G, which is, I think from our sort of investment screen, working with public companies give us that extra layer of comfort that perhaps private investments don't, because, it's difficult to kind of see through. Whereas if you're dealing with a public company, whether you're large, small, micro cap, there is a regulatory governance structure, at least bare minimum, that they have to meet. So for us, that's, I would say generally all the deals that we don't do fail mainly because of the G.
Yeah, I agree with that. We see it on the G side too, and that's an excellent point. We talked about this the other day briefly. For us, it's the G is the general G. Do you have general G structure? And then comes along with that is everything we're talking about here in ESG. It's an additive or supplemental piece to what we would consider capital G in governance, and that's how we see it in the microcap world.
I hate to say that we're all going to agree on this, but actually, I think it's all G. The E and the S are promises that are only enforced if you have the governance infrastructure. Yeah. And at GIX, that's one of our core observations and pieces is that what you say matters, but what you have to back up what you say is what matters more. And when we talk about the governance structures, do you have board level buy-in? Do you have management level buy-in? But also, do you have employee support for it? We call it from the boardroom to the loading dock, because a lot of time, the guy who runs the loading dock or the person who's in charge of the production facility says, "I get all of that good stuff, like that environmental crap. Thank you. But I don't have the resources, I don't have the training, I don't have the time, I don't have the people, and I'm being measured on how many trucks I roll or how many widgets I put off the production line. So none of that stuff is being compensated, so I can't pay attention to that now." And everything that you said you were going to do with the best of intentions just fell apart because your governance structure wasn't in place to enforce that.
Gentlemen, I'm sorry to cut you off. We have just a few minutes here. I wanted to go to the audience, see if there are any questions from anyone.
Please.
John, I know we have one from the virtual.
We do. So question from the online audience. Somebody's asking, what's the best way for a small microcap company who is doing the right things in the ESG space to get recognition from the investor community?
Well, I'm going to plug the GIX for that one.
Perfect answer for that.
The idea that when we started the exchange was exactly that there are companies who are struggling to get attention, who want to be able to focus the story on what they're doing right. If they qualify for listing, even at microcap level, qualify for a NASDAQ listing, they qualify for a GIX listing. So I would have them call me.
Being a small publicly traded company in the ESG space and struggling to get ESG attention, I would say really, just finding a network of champions. That's why we work with Shawn and his team. Would be interested to learn more about the GIX, obviously, and finding that community, because that community, I would say, there's many more companies in that same community, and really a conference like this allows companies that are along that same path to advocate for each other. And that's really sort of, I would say it's a long journey, because using my example earlier, my personal bank that I deal with on a personal level, they're selling me product that isn't naturally green, but eventually working with different groups, eventually, hopefully, those products will become a lot. That's really what I'm.
Bernard, thank you very much. Shawn, Dan, Bernard, Joe, thank you very much for your time. I think we are at our limit here. So again, thank you.
Thank you.
Thank you.